Hi, I'm Mike Cintolo, editor of Cabot Market Letter and Cabot Top 10 Report, and this is your Cabot Weekly Review. Well, the market finally gave up the ghost this week, with all the major indexes breaking key support levels on huge volume, telling you that we're in a correction and you should be defensive. So I wanted to spend a few minutes right now answering some questions I've been getting that are on everyone's mind, as well as looking back at some tactics that could have made this week a little bit less harmful. As we look at the charts here, here's the NASDAQ composite. And you know, a picture's worth 1,000 words. You see the NASDAQ is just totally broken down through its 50-day moving average, which is this thin black line. The question is now, what do you do? I'm getting questions, should you sell, should you buy? On the sell side, it really depends where you are in your portfolio. If you're 90% invested and you own a bunch of leading stocks that have broken down, like a Green Mountain Coffee, our answer is yeah, you can still sell some. You don't want to ignore the market and just hold on to a bunch of losing stocks and hope that things get better. That's not a good investment strategy, hope. So what you should do is, if you own a bunch of bad stocks that have all broken down, sell some, and then try to sell the rest on the bounce. Just be sure to stick with a plan so that if they do bounce, if you get a Green Mountain, it does bounce up here to 81 or 82 next week, you're okay with that and you sell it. You don't get all excited again and say, all right, now it's going back to 100. You follow a plan. Selling some here is okay if you're still heavily invested. On the buy side, we wouldn't be doing much buying because the trend is down. However, it's the flip. If you're 80% in cash, yeah, buying a little bit of Baidu, which is still probably the #1 growth stock in the market on this pullback, or maybe, of course, an Apple, which, of course, had the big shakeout on Thursday. Something like that is possible. You might be looking at something like Netflix, which is holding up very well. You can see it hasn't given up much of its huge advance. Even a smaller stock like Coinstar, which had a huge volume breakout on earnings a few days ago, and again has been actually grinding higher this week, even though the market's been selling off. Taking a few small positions is okay, but just remember that in bad markets, good stocks can go bad in a hurry. So you don't want to push it too much. Something like a Netflix or a Coinstar looks good today, but if the correction continues 2 weeks from now, they could get hit like so many other stocks have already gotten hit. Back to the market itself, people are saying, hey, how far can we go? Is this the end? Don't even try to figure that stuff out. The trend is now down in the intermediate term. Okay, the sellers are in control. Hopefully this is the bottom, but maybe it lasts 3 more months. I mean, there's really, nobody knows. Everyone will give you a prediction these times. Everything's so volatile. Everyone has an opinion. But the only opinion that counts is the market. So just take it day by day, week by week. If we're going to bottom here and turn up, it won't take long to just read it through the market and be able to find some good stocks to buy. In terms of, finally, I just want to say, in terms of the news and the volatility, some guy hit a B instead of an M, just ignore that stuff. Just follow the evidence of the market, okay? Emotions can get really high when volatility is high. Stocks are going down, they're coming back up. The news is this, Greece said this, Germany said that, the elections in Britain. Just follow the market. It's more important than ever, okay, when things are so volatile and there's so much news, to keep your eye on what counts, which is the market itself. Now, I did want to go back real quick. Ways to alleviate, this week's pain. I mean, listen, everyone's probably getting hit this week, but just notice here in the last couple of weeks, after a very, very, very smooth 6 to 8 week advance, 7-week advance, you started to see the market really chop around. This is the S&P 500, but it's the same thing with the NASDAQ, and really it's the same thing with a lot of leading stocks. And this was just an early sign that the supply and demand dynamic was changing in the market. As opposed to the bulls just running over the bears and there was no resistance at all of a sudden the bears started putting up a fight. Now that was no guarantee we were going to sell off like this, but it should have had your antenna up that said, hey, we've had a good run here. A lot of stocks have come a long way. It's earnings season, which is always volatile anyway, and now we're starting to chop around. Maybe a turn in the market is coming. Just keep your antenna up. So that's just one thing to keep in mind. You do often see that in the market before turning points. But the other thing I want to talk about was really portfolio management. Buying right and selling some on the way up can really alleviate the pain of days like Thursday or even full weeks like we've seen. If you were doing most of your buying here when the market began to confirm its uptrend in late February and early March, and maybe you sold a third of your shares of some of your winners on the way up when they maybe it was ahead of earnings, you didn't want to take that risk, or maybe they just got very extended above their 25 and 50-day moving averages. There was a lot of stocks that, that fit that bill. Just doing that can put some money in your pocket, and again, you're going to take hits like this. Most people, I guess, weren't 100% cash. a couple weeks ago, and if they were, then they probably also missed a huge run-up, so that's not realistic. But just taking some off and doing proper portfolio management, buying right, selling some on the way up, keeping all losses small, that sort of thing, can really make this week much, much, much less painful. And that's something to keep in mind during this correction, and as we come out of it eventually and start a new buying spree. You want to be there when things turn in the best leading stocks, and that will pay off not just in the advances, but also make the following decline whenever that happens much less painful. Well, that's all the time I have for today. Thanks for listening, and stop by again next week for another Cabot Weekly Review.